You spot the perfect setup. Price breaks out past heavy resistance, you enter long, and instantly the market crashes in the opposite direction. This happens because most traders spend years obsessing over surface-level price action, support lines, pin bars, engulfing patterns, while completely ignoring the underlying force that actually drives the market. Think of price as a heavy-duty truck trying to climb a steep hill. Volume is the engine's power. A truck might technically be gaining altitude, but if the engine is sputtering and smoking, that vehicle is running on fumes. A stall is inevitable. Relying exclusively on price patterns means you are driving blind. To know if a breakout will survive, you have to measure the fuel. You'll often hear that tracking volume in Forex is impossible because the market is decentralized and has no single exchange. We overcome this with tick volume. Instead of counting the monetary value, it tracks the sheer frequency of price changes within a window. Research from the Bank for International Settlements proves that this tick frequency has a 90% correlation with actual traded volume. When tick volume violently spikes, it reveals the visible footprints of banks, hedge funds, and major liquidity providers entering the market. Retail traders don't need to know the exact dollar amounts changing hands. Tracking tick pace is enough to reveal exactly where institutions are deploying capital. To read these footprints, we use a diagnostic framework called volume price analysis. The entire system rests on a simple mechanical rule. Volume represents the effort, and the physical spread of the price candle represents the result of that effort. Scenario 1 is the validated move. A wide bullish candle is matched by a proportionally massive volume spike. High effort created a clear result, proving institutional buyers are driving the price up. Scenario 2 is the trap. You see a similar wide bullish candle, but the volume underneath is virtually empty. This is an effortless move, caused by thin liquidity, and it will likely collapse the moment real sellers return. Scenario 3 is the squat. A tiny candle body sits directly on top of ultra-high volume. Here, massive effort yielded zero result. Institutions are quietly absorbing every order in the market, making a reversal highly probable. True market direction only reveals itself when you verify the visible price against the hidden volume. This dynamic scales up from individual candles to entire macro trends, ending in a spectacular event known as the volume climax. Picture a market sliding downward for hours. Suddenly, an unusually massive red candle prints on the chart, backed by the highest daily volume you've seen all week. This looks terrifying, but it represents maximum pain. It's the exact moment the last exhausted retail traders finally panics and hit sell at the absolute bottom. The smart money steps in to absorb that panic. They buy up all those retail sell orders, leaving a long bottoming tail that signals the selling pressure is dead. By isolating this climax volume, you can stop trading on fear and start taking high-probability reversal entries exactly when the crowd capitulates. Raw tick volume is powerful, but it can be noisy. Professionals use specific derivative indicators to cut through the static and clarify the broader trend. On-balance volume, or OBV, tracks cumulative money flow. If the price climbs to a new high, but the OBV makes a lower high, it exposes a dangerous divergence. Institutions are secretly offloading their positions into the rising price. Chaikin money flow zeroes in on underlying buying pressure. Checking this before you enter a trade helps validate that a breakout has genuine backing before it even happens. Finally, volume profile knocks activity by price level rather than time. This identifies the point of control, the exact price level where the most volume occurred. This area acts like a magnet, naturally pulling the price back toward it during lulls in momentum. Open up your 1-hour or 4-hour charts today. Isolate the last 5 major moves and ask yourself, did the volume effort actually support the price result? When you're ready to trade the data, FXNX gives you the exact tools you need. Deploy AI agents onto your charts, use NX copy to mirror desks, trade on 0-pip raw spreads within a fully regulated ecosystem. Stop guessing at chart patterns, master volume, and start trading alongside the institutions that actually control the tape.